So yes, you want to make sure that you have really good academic references for your grad schools. You're going to need it for business letters of recommendations, and you're going to need references, okay? People that can actually talk on your behalf, okay? And I get people a lot of jobs by being that individual. You can call me anytime you want. Okay? I know your generation doesn't like to pick up the phone. Pick up the phone, okay? I will get back to you as soon as possible. If you call me, I will get right back to you. If you text me, I will get right back to you. If you email me, it'll take time, because I get a lot of emails every single day. I'm extremely responsive because I like to be, because I like to help. My success is basically giving you the knowledge that you need to be successful, and if I can help place you in an internship or a job, or in a really good academic program for a master's degree in management or finance or econ or data analytics or whatever it is, that's my success, right? Because you're going to go on and be successful. You're going to go, Professor Souza was really helpful for my success. I wish people would have helped me when I was in your position. I'm here to help you. Please fill out that last one, because that's the most important part of this survey that you're filling out, is your elevator pitch. Does everybody know what an elevator pitch is? Does everybody know what does anybody not know what an elevator pitch is? You don't? Okay. So do you know Schwab, the investment management company, Charles Schwab? No? Okay, it's like one of the biggest broker dealers and banks and investment advisory firms. I think they have billions and billions of dollars in assets under management. Chuck Schwab's like about this big, but he's worth like, $1 billion. If you were caught in an elevator with Charles Schwab or anybody else you can think of that's Elon Musk or something like that, and you started a conversation, they go, "Oh, what do you do?" "My name's Elon Musk," and you go, "Nothing," or something. You got to have an elevator pitch. And the elevator pitch goes something like this. "Oh, hi, Elon. My name is Larry Souza. I attend the University of San Francisco. My concentration is finance. I graduate in May 2019. I want to work for you as a portfolio manager in your portfolio management." How long did that take? How long did the elevator pitch take? How long did that take? Like 10 seconds? 20 seconds? How long did that take?
10 seconds.
Like 10 seconds. Okay. Was I pretty clear? Yeah. I go to the University of San Francisco. I'm a finance major. I graduate in May 2019. I want to work for Charles Schwab as a portfolio manager. That's it. Elevator pitch. You all need an elevator pitch, because people are going to ask you what you want, and they will give you what you want. If you can't tell them what you want, they're not going to help you. Okay? People are going to help you if you can ask for what you want. Okay? And a lot of times I get, "Professor Souza, I don't know what company I want to work for. I don't even know the position I want to be in. Doesn't matter, make something up. I want to work at Tesla, as a marketing manager. I want to work for Restoration Hardware as a inventory analyst. Make something up. Okay, it's better to have something than nothing. And what you'll find out is your pitch is interchangeable. You'll be able to swap out the company and the position at some point in time in the future. Okay? So it's really, really critical that you're able to communicate this stuff. And you got to be able to communicate it quickly. People do not have 2 minutes because their attention span is about 1. You can't do it in 20 minutes, and nobody's going to give you 2 hours, except for your mom or your dad. Is going to probably listen to you for 2 hours because she loves you. Okay? Most people love you, we like you, but they're not going to give you that much time. Okay, so you got to be really, really to the point. Okay. Yes.
Are we turning these in today?
Yeah, you're going to give me this. Okay, so that I know what you want and who you want. And I would like you to ask you to give me the elevator pitch at the end. So you're going to need an elevator pitch. If you don't have one, make one up. If you don't have a resume, make one up. If you don't have a major, get one. If you don't know what your major is, you should get a major. The best majors are, my major is marketing with a concentration in finance. My major is entrepreneurship with a concentration my major is business administration with a concentration in marketing and a focus in finance. So you get both. A major in entrepreneurship with a focus in marketing. A major in entrepreneurship with a focus in accounting. Something technical and something quality. And people love the quant stuff. They love quant with marketing. Okay. Quant with entrepreneurship. Because you're going to have to look at the financial statements. Even if you're working in a marketing position, you're going to have to be able to build pro forma income statements to be able to project out the cash flows from your marketing campaign. You have to figure out how much money it's going to cost to put together that marketing campaign with the advertising. And the company's going to want to know the return on investment, their ROI. Okay. So you're going to need to I started off in finance and ended up in marketing. Okay. Started in finance and ended up in marketing. Started in finance and ended up running my own companies, entrepreneurship. Started in finance and ended up leading teams of data scientists and programmers to develop new financial products. Started off in economics and finance and ended up managing multiple research departments for large investment management companies in real estate. So you have to be cross-functional. You're going to be doing a little bit of everything. So did everybody fill out the page and the elevator pitch? Now, do you think that you could give me a quick elevator pitch if I asked you? Could you do it in like less than 10 seconds? So we could blow through it really quickly. Can you do it? Can you give me your pitch just like that really quick?
Right now?
Yeah,
My name's
and
Zach.
yell it at these people.
My name is Zach Bongiorno. I attend the University of San Francisco.
And talk to them because this is your network,
Yes.
and your network is your network.
My major is business administration with a concentration in marketing. I plan to graduate in 2020, and I want to be the head of operations of a private car broker.
Oh, that's awesome. Next. You guys got to stay focused here, or else we'll be wasting our time doing this.
My name is Cyrus.
And speak up really loud.
My name is Cyrus.
Thank you.
I attend University of San Francisco. My major is business administration with a concentration in marketing. And I plan to graduate in 2020.
And use I will.
I will graduate in 2020 in May. And I want to be a business owner looking for my own company.
Excellent. What's the company? If you're going to have your own company, you got to tell me what it is.
Okay.
You got to be very specific. What kind of company? Import, export, cannabis.
Export.
Okay. Next.
My name is Tim. I attend University of San Francisco, and my major is going to be finance.
And can you talk to the audience because the people in the back can't hear you and they're
And,
disinterested.
With the concentration in finance, on finance analysis and also hotel management. My plan is I will graduate on 2020 in the spring, and then I want to be a restaurant owner for a Michelin restaurant owner and working as a boss for it.
Okay. Can we use a different word than boss?
Oh, sorry.
Because I know
owner?
that's a cultural term. I would say business owner.
Yeah.
Okay. Thank you.
My name's Trina Hoban. I attend the
Don't forget
University.
to talk back here because turn around because we're all back here now.
My name is Trina Hoban. I attend the University of San Francisco. My major is international business with a concentration in marketing. I plan to graduate in May 2020. I want to be a CEO working for my own company in the food industry.
Excellent.
My name is Sujita Kohli. I attend University of San Francisco. My major is finance with a concentration in analytics. I will graduate in May 2020. I want to be a financial analyst working for a financial institute like Ernst & Young.
Oh, that's awesome.
My name is Andrea. I attend the University of San Francisco. and my major is finance with a concentrate in math. I plan to graduate in 2019. I want to be a data analysis working for a financial company.
Excellent. You know, at PwC, when my student
Yeah, I
just
know.
graduated, she's on a partner track. They basically gave her the job, and then she got into USC to do a master's in business analytics in the gap year. Now she's going to go back after she's done, and she's going to head up the audit team with all their data analytics background.
That's awesome.
My name is Han. I attend University of San Francisco. My major is business with a concentration of in marketing. I'm planning to graduate in
Will
May.
graduate.
I will graduate in May 2019. I want to be a salesman working for an international company.
Sales manager.
What?
Sales manager.
Salesman.
Salesman is a gender.
Oh, okay.
You got to be careful.
Salesman.
Perfect. Okay, next.
Salesperson.
Perfect. Oh, you already did. Thank you.
My name is Yongwei Wu. I attend University of San Francisco. My major is accounting and finance with a concentration in auditing and consulting. I will graduate in May 2021. I want to be an accountant working for accounting firm like PwC.
Okay. As an audit manager, or do you want to be in tax?
Yeah, tax.
Tax? Okay, excellent.
My name is Sarah.
Oh, I'm sorry. USC has a one-year program in tax. It's like one of the top one of my students went there. If you want to talk more about it, I'd be happy to talk to you about that.
Thank you.
Sorry, didn't mean to cut you off.
It's okay. My name is Sarah. I attend University of San Francisco. My major is accounting with a concentration in finance and statistics. I will graduate in May 2021. I want to be an accountant working for accounting firm.
Such as? Ernst & Young. Or E&Y. E&Y. Say E&Y. Perfect. You gotta be as specific as possible. Okay? You gotta be you can always change it, but you gotta have something. Okay?
My name is Jai. I attend University of San Francisco. My major is finance with a concentration in marketing. I will graduate in December 2019. I want to be an event planner working for fashion or media company.
Any in particular?
Not really.
Do you know of any fashion or media companies? Anybody know any large fashion or media companies? Yeah, how about Nordstrom's or Bloomingdale? Yeah, totally, thank you.
My name is Jason Jose. I attend the University of San Francisco. My major is business administration with a concentration in accounting. I plan to graduate in fall 2019, and I want to be an auditor for an accounting firm like Deloitte.
Okay. Just say Deloitte. Yeah, I mean, you can always swap it out, but just make sure that when you're interviewing with the people from E&Y, that you say E&Y and not Deloitte. Okay. I set somebody up with an interview at Morgan Stanley, and they wrote a cover letter that said Merrill Lynch. Okay. They were really mad they didn't interview with her, but they ended up hiring her at some point because she was persistent.
My name is Danny. I attend University of San Francisco. My major is accounting with a concentration in tax. I plan to graduate in spring 2020. I want to be an accountant working for PwC or bank.
Excellent. Georgetown has a pretty good tax program. Golden Gate has a good tax program. USC has a good tax program. Sure, there's some other great tax programs.
My name is Austin Abling. I attend the University of San Francisco. My major is business administration with a concentration in marketing. I will graduate in May 2020. I want to be an officer working for the United States Army.
That's fantastic. Congratulations.
Thank you.
My name is Sabrina Asbanian. I attend the University of San Francisco. I'm doubly majoring in marketing and entrepreneurship with a concentration in market research and consumer behavior. I will graduate in May 2020, and I want to be the CMO of LVMH.
That's awesome. I love it.
My name is Anastasia Rivera. I attend the University of San Francisco. My major is business administration with a concentration in law. I will graduate in May of 2020. I want to be a corporate litigator working for either Apple, Microsoft, or Berkshire Hathaway.
That's great. Congratulations.
My name is Steven. I attend University of San Francisco. My major is entrepreneurship with a concentration in marketing. I will graduate in 2020, and I want to be a business owner working for my own business company in health industry.
In what industry?
Health.
Oh, excellent.
My name is Calvin Lau. I attend to the University of San Francisco. My major is business admin with a concentration in finance. I plan to graduate in May 2020. I want to be a financial advisor and analytics working for Franklin Investment.
That was excellent. Thank you.
My name is Nico. I attend University of San Francisco. My major is finance with a concentration in marketing. I will graduate in 2020, and I want to be a product specialist working for Nike.
What did you say? What was the last part?
Oh, product specialist working for Nike.
Oh, awesome.
My name is Sarah. I attend the University of San Francisco, and my major is marketing with a concentration in public relations. I will graduate in May 2021. I want to be a product marketing manager working for Google.
Excellent. Congratulations.
My name is Ryan Hubbard. I attend University of San Francisco. My major is accounting with a concentration in auditing. I plan to graduate in fall 2019. I want to be a sales auditor working for Nordstrom.
Oh, that's fantastic.
My name is Ruho. I attend University of San Francisco. My major is finance with a concentration in marketing. In May 2020. I want to be a manager working for international trade.
Okay. Next time, come back with something specific. Okay, but that was really good.
My name is Lisette Robles. I attend the University of San Francisco. My major is international business with concentration in marketing. I will graduate in May 2020. I want to be a marketing consultant for Adidas.
That's awesome.
My name is Savannah Devereaux. I attend USF. My major is marketing with concentration in international marketing. I plan to graduate in May 2020. I want to be head of marketing working for Sweet.
And what do they do?
It's a publishing house.
Oh, nice. Oh, excellent. Do they have an office in New York?
I'm not sure. I want to see that.
I bet they have clients in New York. Oh, you're gonna have to take two now. You're gonna have to take two. No, you gotta take two. I'm so mean.
My name is Tan Nguyen. I attend University of San Francisco. I major in business with a concentration in management. I will graduate in 2020, and I want to become the CEO of my family company in Lincoln Group.
And what do they do? Oh, real estate?
Investment, real estate,
Oh,
trading,
awesome.
holdings.
Fantastic.
Need to catch up, right?
Yeah, that's great. University of Hong Kong has like the best development programs next to USC. Masters in Real Estate Development and MBA with a concentration in real estate development. You can also do that at MIT. It's a really good program, and I would rather go to Columbia.
Yeah,
NYU.
I would too. I would too. I would have.
Yeah, I could. That's great. Fantastic.
My name is Brian May. I attend the University of San Francisco. My major is business admin with concentration in marketing. I plan to graduate in May 2020. I want to be a coffee exporter.
Oh, excellent.
My name is Daniel Dewan. I attend the University of San Francisco. My major is international business with a concentration in psychology. I will graduate in 2020, and I want to be a regional sales exec for a property developer.
Oh, that's awesome. If you guys want to do some real estate stuff, yeah, let me know if you guys want to talk about it. It's another one of those issues.
All right.
Ran research departments for multiple property development companies and investment management companies. So investment banking? No? Do you know we're gonna do, Goldman Sachs in this class? Do you know Goldman Sachs? JP Morgan? Goldman Sachs? They're the fifth largest bank in the United States. It would be underrated. Okay, what was the first, what was the position? What was the position? Yeah, and then what was the position? Administrator? Okay, for an international company? Like SAP or IBM? Yeah, a big company? Go ahead. Excellent. Nice job.
So my name is Lucas Chen. I attend this at my
How about JP Morgan? How about Goldman Sachs? Yeah, do you know we're doing Goldman Sachs at the end of the semester? Yeah, that's what we're gonna do.
My name is Paul. I attend the University of San Francisco. My major is business and competition management. I will graduate in May 2020. I'll be a business owner working for my own transportation company.
Oh, nice, excellent, congratulations. Any in particular? Okay, what about like Google? Okay, okay, perfect. Any bank in particular? Credit Suisse? Deutsche Bank? Santander? Citigroup? Bank of America? Wells Fargo? Okay, thank you, everybody. Now that I got to know a little bit about you, why don't you go ahead and pass those forward? So I can have those. If you ask for what you want, people will give you what you want. But you have to be able to ask for it. Okay? And you got to be very clear in what you ask for. If you can do that, people will give you what you want. Okay? Because most people are nice people. They want to see you succeed. Okay? You got to tell them. And you can always change what you want later, but you got to tell them something. And you never know who you're going to meet, right? Just never know who that person is in line for coffee that starts up the conversation. Okay, what else? What did I do? We did the survey. I gave you the syllabus. I'm going to go over that in a minute. I did give you the statistical pretest, and I'll go through where to get some of that information. The statistical pretest is basically a primer. Okay, and I don't have a problem if you work in teams on this stuff. I highly encourage that you can reduce your workload in the class if you work in teams. Okay, you just got to make sure that the other person that you're working with has legible handwriting, that you can actually understand what they're writing, so that you're not just working together, you know, using each other's material and then copying down errors because they're wrong. Okay, so you got to be really careful, and I do highly recommend that you work on your handwriting. Okay, you work on your handwriting. You lose your phone or your briefcase gets stolen, okay, and you have to make a presentation, and you need to do the presentation very quickly, and you need to write up the notes and hand it off to somebody. If they can't understand your handwriting, you're done. Okay. A lot of times we'll be sitting in meetings, people will be taking notes, sometimes on a computer, sometimes they'll be handwriting their notes, and the boss will say, or the senior executive will say, will you please aggregate the notes and give them to Lily, because Lily's going to type them up and then redistribute them. Now, Lily's not going to get up from her desk as she's transcribing the notes to come into your office to ask you what it was that you wrote down. Okay? Your notes are going to get thrown out because she doesn't have time to get up and do that. So you really need to focus on your handwriting. Okay? And if you have handwriting problems from a disability or something like that, you need to talk to me. Okay? And we need to talk to SDS. Okay? You really should be focusing on your handwriting. And I do find that there is a high correlation between legible handwriting and GPA. Okay? And when you can handwrite and you take really good notes and you can give them to other people and you can study from them, you basically are installing knowledge in your brain that becomes permanent. Okay? Typing stuff up does not necessarily imprint permanent knowledge into your brain. But when you write stuff out, that pen to up your arm, motor skills imprinted in your brain, you end up memorizing it, and you can end up recalling that information later on when you need it instantaneously because you have a photographic memory. Okay? You all have a photographic memory. You know how to get home, you recognize people by name, you have photographic memory, so you can train your brain to have a photographic memory to remember everything you see in all of the classes that you're in for now on. Remember everybody's face, remember everybody's name, remember everything you see, because you have a photographic memory, you want instant recall, and when you go to take the CPA exam, or the CFA exam, or the CFP, or the Series 7, the 66, the real estate brokerage, the insurance license, you're going to ace the test, okay? And that's all that matters is acing the test. Because if you don't ace the test, and you can't get the real estate license, you can't sell real estate. You can't pass the insurance license, you can't sell insurance. You can't pass the Series 7 and the 66, which is the security licenses and the investment advisory licenses. You can't advise people and you can't sell them securities. If you can't pass the bar, you can't be an attorney. Okay? So you need to have a photographic memory to be able to pass a lot of those exams because they're really, really hard. Okay? If you can convince yourself if you do have a photographic memory now, you will have a photographic memory when it comes time to take those exams, particularly the GMAT, the GRE, and those exams for academic programs because you want to get into the best school that you can. Okay. So the statistical pre-test, I'll go through it quickly here, and then when I go through the course website where a lot of the resources are, I'll show you where a lot of the resources are. Okay. So here's the pre-test, and a lot of the things on the pre-test is actually in the book. So you can use the book as a resource. You can use Google as a resource. You can use Wikipedia. You can use other resources to be able to find this information. And you could use the resources that I provide you that are available on the course website that I've already aggregated for you to make the information more readily available to you. Okay? So we're going to, and this is basically just a statistical review. Okay? But what I'm going to ask you, what I'm going to teach you, is not only how to use the statistics, which you're all going to be using statistics. You're all going to be using financial information. You're all going to be using data. And actually the requirements now for data manipulation, either using R, Python, SQL, Excel, those requirements are actually becoming more and more intensive. Okay? Where I have people in finance and accounting where they say if they have SQL or R or Python, we're gonna hire them. Okay, if they got marketing, the programming, the finance, the accounting, I don't care what it is, if they have any coding background with their discipline, we'll hire them. Okay, because we're dealing with large data sets these days. And if you know how to write in your personal and you can make presentations, you can do the analytics, you can do the presentations, you can communicate. Now you're competing against the Cal, the Stanford, you know, and the Ivy League people. And you're just as smart as they are. Okay? You're just as smart as they are. So again, the statistical pretest is pretty straightforward. Show me the equations. You know, for the arithmetic and geometric mean, we use geometric means when we're doing performance benchmarking on portfolios for performance. I build portfolios, either stocks. Does anybody not know what a stock is? Anybody not know what a stock is? Everybody know what a stock is? Stock? Stock? No? Yes? No? I see nothing. Basically, I see people looking into their computer. So do you know what a stock is or not?
Yes.
Yes, okay, so it's a claim, you know, on the ownership of the company, owner's equity, there's a piece over there on the right-hand side of the liability. It's very expensive, but again, they own the company, and then they usually use debt and bonds to lever up their owner's equity. So it's a claim. It's usually one vote per share, and shares can be as cheap as a penny, as expensive as, what's Apple now, like 800, or Google's like 800, or Amazon's like 800 bucks a share. Okay, you'll be doing a bunch of research, okay? You guys are gonna be analyzing securities, you're gonna be building a portfolio, I'm gonna teach you how to back test it, because all of you, every one of you, is gonna own a stock. You're gonna own a portfolio, because there's not a lot of things to invest in this world, okay? In the universe of investable assets, there's not a lot. You can invest in real estate, your house, commercial real estate, your building. You're definitely going to own stock, either in the company that you own or the company that you're going to work for. If you make a lot of money, you're going to have a 401k, which is a retirement account. You're going to take that money and you're going to invest in mutual funds or exchange traded funds. You're going to be exposed to the stock market. So you need to understand the stock market, you need to understand stocks. And if you're really smart, you go work for companies. You go work for a company that's a publicly traded company, and you ask them for stock grants and stock options in the company. So when the company goes from $10 to $100, you're in the money, you can now exercise the options and make $100,000 or maybe $1 million. Okay. That's why you need to understand this. Okay. And then bonds are just claims, they're liability claims. We'll talk about commodities and stocks and bonds and oil and the US dollar. I'm going to train you, okay, to do that. But you got to understand the statistics to do the analysis. So we're going to talk about distributions. You're going to have to look up the distributions. The assumption is everything is a normally distributed distribution. Okay? If you have a large enough data set and the data is normal, then you can, the larger the sample size, you're going to get a normal distribution. That's the assumption. Okay? But sometimes you're not going to have a normal distribution. It's going to be exponential or binomial or skewed. Then the question is, well, how do you deal with that data? Because if you run the statistics based on normally distributed data and it's skewed or binomial or exponential, it's not going to work. You're going to get bad information and you're going to drive your company into the ground. Okay, so you got to understand the different distributions. You got to understand the mean, the median, and the mode. So show me those equations, okay? Because you're going to memorize this stuff. Skewness, kurtosis, liptokurtic. Liptokurtic is what we went through in the financial crisis. Okay, fat tail on the negative side with a skewed distribution, totally messed up distribution. Okay, not normal. Okay, so you got to know how to deal with those. Histograms, stem leaves, box plots. That's where you're doing data analysis. You're looking at the data. You're looking at how it's distributed using different types of data analytic techniques to be able to see how the data is behaving, to then be able to correct the data, to then apply the statistics to get the information to make the decisions. Okay, and this is just formulas. Then you got to understand variance and standard deviation. Okay, first thing that needs to come into your brain when you hear variance or standard deviation is risk. Okay, when you talk about volatilities, and you talk about standard deviations, you talk about variance, you're talking about dispersions around the mean. Okay, and I'll go through a little bit of this in a minute. But you got to understand what standard deviation and variance is. If you're going to go on and do accounting or anything really, you're going to be dealing with standard deviations and variances, okay, all the time. You're going to need to know what a confidence interval is. Confidence levels. And actually what I would be doing too is going through this and writing notes as quickly as possible in it because I'm going over a lot of this stuff now. So the confidence levels are going to be 99, 95, and 90. Okay? And that's basically going to allow you to be able to test the statistical significance of the data, okay, the factors in which you're testing to see if they're predictive so that you can build a model to be able to forecast the future. Now, is that important? Is it important to be able to forecast the future using statistical models? Is it important? Yes. Absolutely. If you can forecast the future, particularly stock prices, or real estate prices, or bond prices, can you sell when they're high and buy when they're low? It's called arbitrage. Okay. And you can make money when prices are falling, and you can make money when prices are rising. It doesn't matter. That's when you become a trader. I'm going to train you how to become a trader. I'm going to teach you fundamental securities analysis, technical securities analysis. We're going to do trading memos, and I'm going to train you how to write these executive level memos that you will be writing for the executive management team, the board, okay, senior manager, your boss, your hiring managers, your clients. You're going to be writing. You're going to need to have clear communications. And the memos were brought to you by multiple of my clients and my friends who basically said, your students can't write. They can't write a memo. I can't hire them. And it wasn't necessarily you. They were actually Stanford and Cal students too. So if I can train you to be able to write at a very high level in the format and the standards required at that level, it'll be so much easier for you when you make that transition into the corporate or into the business community. Okay? It'll be so much easier. But it's going to be a pain in the ass working with me because we're going to go back and forth until we're perfect. Okay? Because it's got to be perfect. Okay? No I's over a T and no, I's crossed with a T. Okay? It's got capitalizations and colons and subject-verb agreements, conjunctions and commas where they're supposed to be, periods at the end of every sentence. It's got to be there. Okay? I'm sorry. And you're juniors and some of you are sophomores, and I know you're a senior, but you're probably a great writer by now. But you really have to work on your writing. Okay? You have to. Okay? And that's one of the reasons why I'm here. Z, T, and F statistics, we're going to go over that. Did you guys have regression in your statistics, where you did time series and cross-section regression analysis and be able to figure out the statistical significance of one of the independent variables by using the T statistic? Mm-hmm. Yes. And the modeled statistic using the F? Yes. Okay, great. And we usually don't use the Z statistic because it's a student T statistic that we use with very small sample sizes. We usually use large sample sizes. Okay? Coefficient of variation, which is basically the standard deviation divided by the mean return. The inverse is the expected return divided by the standard deviation. That's called the risk-adjusted rate of return. Okay? If I have annualized or quarterly returns, and I divide them by annual standard deviations or quarterly standard deviations, I can get a return to risk ratio. I can get a risk-adjusted rate of return. I can now start comparing portfolios and exchange-traded funds and other aspects of finance and operations and be able to choose the one that's going to give me the highest return to risk ratio, the highest unit of return per unit of risk. Okay? So it's really important. The covariance. Covariance is basically, it's really like a correlation in the volatility between the two variables. So we look at covariances all the time. If you take an investments class with me, we would be doing portfolio quadratic optimization using covariances, using Harry Markowitz's Nobel Prize winning quadratic optimizations. And you may actually end up using them in your operations research. You'll probably use the optimizations in your accounting in some form or another at some point in correlation coefficient, positive, negative, zero correlation. Those are really important when you're building portfolios of real estate, stocks, and bonds, and I'll go through all of that stuff. The next one, page 7Q7, please take a note. That is the portfolio standard deviation, not the standard deviation equation that was on page 5 under Q3. This is the portfolio standard deviation equation, okay? So it's very specific, and you're going to get it in the book, out of the book, okay? Or you can look at it, okay? But that's the standard deviation for the portfolio. And then I ask you, what would a high covariance, which you'll see is there's a covariance variable in the portfolio standard deviation equation. Please take note. The covariance is positively correlated or is directional. It's the same direction as the standard deviation. So if the covariance goes up, so does the portfolio standard deviation. If it goes down, portfolio standard deviation goes down. I get at least maybe a half a dozen to 3 students that just don't get that. Okay, so I'm kind of giving you some of the secrets now. What is the value of using a regression? We just said it. What's the value of using time series regression? What does it allow you to do?
Forecast.
The forecast. Okay. Is it important to be able to forecast? Absolutely. Do major corporations forecast their sales, revenue, operations, raw materials, returns on their stock? Yes, 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 yes. Okay. What's the difference between cross-sectional regression and time series? Okay. Cross-sectional, one period over multiple entities. Time series, one entity, variables over time. Okay. You want to put the equations in there so that you memorize them. And don't forget the error term. Okay. Don't forget the error terms. Okay. So I want to see regression equations with at least 3 to 5 independent variables in there with an error term. And don't forget the intercept. Okay. So part of this is just review, right? A lot of this is review with application. Okay, so I need to get you to a certain level, theoretically, quantitatively, before we can start doing some pretty cool stuff. Okay. So my professor, God bless her soul, Betty Bleckett at San Francisco State, and I took her regression and her quantitative economics classes. She always had a pre-test. Okay, very first week, she always had a pre-test. Okay, so one, it gauges. I get a very quick assessment of your analytical capabilities quickly. I get to know who you are as a student very quickly. And then what you do is on the back of the pre-test, you list the grades that you got in your prerequisites. Okay, so again, another assessment. I got to know who has to remediate some of their fundamentals in this class and who already has the fundamentals. If you don't have the fundamentals, there are videos up on the course website for you to go back. And you can also, I just went up to Khan Academy and YouTube and some of the others and just basically went and got macroeconomics and got financial ratio analysis and got financial accounting, and just put them in there for me.
So we should just write down the previous grades?
Yeah, just put the grades in the syllabus, and list the prerequisites, just list your grades so I can see how you do. Okay? And don't be shy or anything. I'm not gonna judge you on it. I'm just gonna encourage you to just, if you didn't do very well, we need to start doing well now. Okay? And if you need to go remediate some of this stuff, please take the time to go remediate it. Okay? Because you gotta be comfortable with this stuff. Okay? All right. What are the dependent and independent variables? Dependent, that's what you're trying to forecast. Independent, those are the factors. Okay? You don't have more than 5 independent variables in your equation, because what do you end up getting? What's your problem when you have too many independent variables in your regression equation? What's the problem? On page 9 at the top, what's the problem? What's your problem? Multicollinearity. Your variables are highly correlated to each other and correlated to the dependent variable. So it's messing up your coefficients and it's messing up the model. You're going to need to take one out. Okay? And which one do you keep in and which one do you keep out? if I had two variables that were highly correlated to each other, and also correlated to the dependent variable that we were trying to forecast, how do I choose which one to keep and which one to throw out? Test question, because it's on the test. Which one do I keep and which one do I throw out? Test question. The one with the highest t statistic, the one that's the highest, has the highest correlation with the dependent variable. Okay. Or do I pick the variable that was cited the most in the peer-reviewed journal articles in the literature that has basically established theory to include that variable in the model? Is it t statistic, correlation, or the literature? Which one is it? I just gave you the answer. Which one? Which one? Is it the one with the highest t, highest correlation with the dependent variable, or the one cited the most in the literature? Anybody else? I got 39 managers here in this room, and I get one answer. Ain't gonna cut it. You're not gonna make it. Okay? I need responses. I need to throw out stuff. If you don't say anything, you're 100% wrong. If you say something and you're wrong, at least you have a 50% chance of being right. And if you get it right, you win. It's 100% correct. That's how the game is played. So one more time. Highest t, highest correlation, cited the most. Cited the most. Trick question. You wouldn't know that unless you work in industry as an economist or as a data scientist. Okay? But you should know that. Okay? I want you to know this because the Stanford people know this. The Cal people know this. Okay? And we want to win. Right? We want to beat them at their game and take their jobs. You obviously know what assets and liabilities are. I hope you know that they both equal each other. So show me that. The income statement. That's what you're going to be forecasting. Okay? It's a pro forma income statement. And in this class, you're going to be learning discounted cash flows and present values and how to calculate future values and intrinsic values. This is the standard methodology used in all major banks, corporations, investment houses, all businesses. We all use this stuff. It's standard. Okay? So you're not learning anything you're not going to use. Okay? Cash flow statement. Well, you better have cash flows. Okay? You raise some bonds, some cash flows. You got more debt. Your sales go up. You pay out all your retained earnings and all your expenses and stuff. You got some cash left over. You got some working capital. Right? Now we won't have to go to the market. And then the key financial ratios, which are totally reviewed, right, from your financial accounting class, right? And these are the most important: return on equity, ROE, ROA, debt to equity, which is your leverage, debt to total market cap, the value of your debt and your equity, price to earnings ratio, the price of the stock divided by the earnings per share is going to give you a multiple. Well, heck, if I can predict the multiple, and I can predict the earnings per share, and I can predict the value of the value of the share. If the value of the share is higher than the current stock price, what am I going to do? What do? You're going to buy it, right? And what if the value is less than the current stock price? You're going to sell it. Okay? That's how people make millions of dollars, is they use all of this stuff. And we know earnings per share. We're going to learn about the weighted average cost of capital, which will be called the discount rate that you will use to discount these cash flows to come up with the values to then make investment decisions. Okay? And then the capital asset pricing model, which is the cost of the equity. Okay? And you're going to need to memorize these things. Okay? You need to memorize these things. Because you'll be in an interview and they're going to be talking, or you're going to be asked to sit in on the controller's meeting, with the CFO, or you're going to be sitting in because you did the advertising or you worked on the marketing for the analyst call with the analysts, and you were putting together the presentation, and this is all the stuff that they're talking about, particularly the financial stuff. Okay? And you got to know what they're talking about. And they may even ask you about this stuff in your interview. Okay? Because you have a business degree. they're gonna expect that you know this. All right, I promise you I won't be this intense the whole class, because I will burn out at some point in time, but I do like to be a little animated and a little theatrical to keep things interesting. Okay, so let's go through, can you pull up on your computers? That's why we're here. We're not in some room way in the back, in some dark room somewhere where they used to put me. They fought to get us here in Malloy with computers. So please, log into your computers and pull up the course website, please. So this course is going to be computer intensive, interactive, and it's expect participation. I usually don't eat a lot before these classes, because I'm so busy. So I get really cranky at times. So if I look like I'm cranky because you're not participating in the class, it's probably because I am cranky because my sugar levels are crashed. So don't take it personally, okay? But I will get really upset, and I will get really disappointed if I don't hear interaction, because again, you're business majors, and you're going to be required to interact with your colleagues and the senior level managers. They're going to demand your input into the process. If you don't understand anything, if you're confused about something, you need to stop me and ask me, okay? Because I get complaints the way I talk too quick. I use very sophisticated language because I assume you know it because you have a business degree. You took the prerequisites. Okay? I assume you read the book. Okay? So if you're stuck, you don't understand, there's probably other people who have that issue too. You need to stop me and ask me so I can articulate it so that we can move on so you can build on your knowledge. Okay? And do not miss a class because you will fall behind. Okay? And that's why I record the classes. For people who have family problems or they're in sports or something happens or I talk too fast or we're going over key concepts, we're going over the exam, and we're going over problems, you can go back and review it, okay, from me, all right? So I try to do that the best I can. So let's go through, can everybody see this? This is pretty awful, isn't it? But you got it on your computer, so I'm gonna come around and make sure you have it up. You don't have a computer in front of you? Oh, perfect. Excellent. Perfect. Awesome. Anybody not have a computer? Anybody not? Okay. Did you want to come over here? There's a spot right here. So you can use that computer. Anybody else not have a computer? Okay. You know what's awesome now? Is you can, with your cell phones, insert apps, interfaces. You can have access to this interface anywhere now. All right, do this. This is a supercomputer. All right, this is a supercomputer. I can run quadratic optimizations off this. In the 1990s, I couldn't do it on a desktop. It took me like 2 hours. Now I can do it in 2 seconds. Okay. You're the most powerful generation on earth. You have technology enabling in your hand. Use it for good. Use it for good. So you can get access to this. All right. So right here, and I'm gonna, do I need to turn off the lights or can you guys see? You can see? Okay. So right here, this is if you want to go back and you want to check out the course I taught last semester, and I also have the course logs from last year. This is how it basically looks. So I'm driving traffic to here. Basically what I do is I'll update the dates, class, lectures. So if you go all the way down to the bottom, that was the first lectures for the class. And as you move up, it becomes the most recent, the most current lectures for the class to the very last class. And these were the team presentations here. Okay? Because you're going to do a presentation at the end of the semester. We're going to do learning sets. When you get done with this class, you will have 5 memos. I'll give you similar to the memos that I just gave you. You will have 5, okay? You use these memos as templates, okay? And I also posted some online so you can use the formatting. The formatting's got to be perfect, okay? And then you're going to do the analysis, and you're going to basically update these memos, okay? All right? Then I'll get to that in a minute. So here's the logs. These are the video logs, okay, for the class, the lectures. And I'll try to post those as soon as possible. It will be posted no later than a Friday or Saturday, okay, of the following week. I'll try to get them up there as soon as possible. But these are all the lectures from last semester. And then here's your course syllabus. Now, this has got to be the longest syllabus in the world, okay? 31 pages. Get complaints all the time. Professor Souza, this is like the longest. You know, luckily I printed them out for you so that people don't complain anymore because they're so long. But what I'm probably going to do is I'm going to give you like a one-page sheet. It's going to ask you some questions about the syllabus to make sure you read the syllabus. I find out a lot of times that the students don't read the syllabus. I highly recommend that you read the syllabus. Why should you read the syllabus? I would read the syllabus, for one, because it's basically 25 years of my own personal work and academic experience in the field of quantitative finance. Okay? I need a doctorate degree, a master's degree, undergraduate degrees, econ finance, and then the syllabus, I basically, when I wrote it up, I integrated everything into it, basically to reflect, you know, somebody like myself who's been in business and in academia, synthesizing it and pulling it all together. And it doesn't take long to read. But again, that's what I would do is I would read it. Here's Perino. In regards to the book, now I've been holding off on updating this book. This is probably one of the best finance books. I mean, it's not the best finance book, but from the people I talk to, they say, oh, Perino, you're using Perino. Perino's a good book, okay? So they may ask you, or people you talk to that you meet that did a finance degree or did a business administration degree, they say, oh, what finance book did you use? I use Perino. And they'll go, oh, good, that was a good book. So it's a good book. Now, I held off on updating this book. So the fourth edition, what I would do, get the 4th edition, do the ebook, okay? Unless you like hardback, you know, then pay the money and do it. Or get the ones with the holes in it, okay, and do a binder. You can do that, or you can do an ebook. Do the ebook with the Wiley Plus option. Wiley Plus option. You can go through Wiley, and I think you can pick up the ebook and the Wiley Plus for like $100 and something bucks, something like that. So it's not that expensive. It's not like $400 or something like that. So it can be pretty cost effective. If you like books and you're a little tight on your budget, my recommendation is you buy a book and you share it with other people. Then you're splitting the costs amongst your friends, right? It becomes a little bit easier that way too. So the cost of the book shouldn't be an issue now. If you work collaboratively in high-performance teams and go through the program together, sharing costs and sharing knowledge. That's some of my best students are partners, whether they're in teams, throughout the whole program, and they come out with like a 3.7, 3.8, almost a 4.0, because they're working with each other. And the load's not so heavy on them, so it's quality, not quantity, that's burying them. So just some strategy on your part. So Perino's really good. Okay. And then the Wiley Plus. If you're having problems with the Wiley Plus, let me know, but you need to get the Wiley Plus, or split it with somebody. Because the Wiley Plus is the first year they got it, freaking awesome. It's awesome. They have narrated PowerPoints, narrated Excel spreadsheet demonstrations. They have all of this like stuff to walk you through the Excel, walk you through the content, walk you through the problems, walk you through all that stuff. And now your generation, my generation, we don't read books, we watch videos, right? It's like if I want to learn how to code in Python, I'm not going to buy a Python book. I'm going to go and I'm going to watch maybe a half a dozen videos on coding in Python, okay? And then maybe get a book or something to solve it. So the way we learn now is completely changed, very different. And then here, this is the bookstore. There, that's the long URL. And then the calculator. You need a calculator. How many people have a calculator? Okay. How many people don't have a calculator? Okay. My recommendation is you get one of these BA2 pluses. They're like 30 or 40 bucks or something like that. If you want to see what they look like, I can give them to you. The HP 10E plus 2, whatever it is, that one's pretty good. It's a little bit harder to work with than the Texas Instruments. And then this is the granddaddy of calculators, is the HP 12C. Very simple, it's easy, it's a great calculator. You can drop it in water or toilet or whatever, and it'll still work probably. But I've probably left about a dozen of these things on somebody's desk, right? So I bought like 12 of these things. But this is a really good calculator too. So bring your calculator to class, every class, okay, to start practicing the calculations, okay? And then during the exams and stuff, if you need calculators because you forgot it, or your dog ate it, or your cat swallowed it, I'll give you some, I'll let you borrow some calculators. Anybody want to take a look at any of these? Going, okay. So always bring your calculator, please. Here is me, okay, if you're interested. Let's see, taught at all these universities. I have an investment advisory firm if anybody's interested in wealth advisory, wealth management. I can advise you on that and probably get you an internship or a job in this area. I also have my own consulting company. If you're interested in working with me on some of my research papers to come publish with me, I'm open. I'll have to interview you and look at your resume. But if you're interested in working on a high-level academic but applied research project that you probably use as an independent study internship or maybe for another class and then co-author with me, I'm more than happy to bring you in on that. I also have a tech company where I'm a business developer, also the chief science officer for them. It's called capitalbrain.co. We do machine learning, AI, all kinds of advanced data analytics in the real estate capital market space. Okay. So we build technology, we build product. This company, Equalize Advertising, I'm not really doing much with them, but we did, you know those big displays, you know, with the advertising on them? That's what we did. Did all the advertising, content development, brought in the hardware, software, and then did all the installation arrangements. And those could run about $100 grand to $200 grand. I also have an investment brokerage firm on the real estate side. If you're interested in getting licensed, or you want a career in real estate, talk to me. I can help you get the license. And I can help you if you want to move into that area as a career. I can help you there too. And then lastly, there's my consulting firm. Here's all the times we're going to meet. Here's all the times we're going to get together. I will probably be here in the class. If there's no class in here, I will come here and hold my office hours here so I can get set up. If there's a class in here before my class, I will be in my office, right over there next to the elevators. Okay. All right? Does most people have their classes here in Malloy? Yeah? Because they used to make me schlep all the way up to Lone Mountain. I was in ripped shape by the end of the semester. But I'll tell you, I was sucking wind like almost once a week. It was pretty brutal. But I got this one. I worked on this. I started working on this in like April. All right. What else do we have? Oh, and then if you have SDS issues, please let me know. Talk to them, have them send me the paperwork, and we'll accommodate you, whatever you need. Okay? And I'm very accommodating anyway. Here, yes, sir.
So when I just clicked on the link for Willie Plus, do you have to buy it first and then search the book?
Yeah, I would, in the book, it'll give you the link, and you can talk to the bookstore, and they'll get you some. Again, I would do the ebook with the Wiley Plus for you. Okay? If you still have problems, let me know, and I'll email you the link. Okay? And I'll probably do that anyway. Okay? So here's all the prereqs. Don't forget to put those on the back of your statistical pretest. Okay? Don't be shy. Work together on that so you can study it. What else do we have here? Oh, honor code. Did everybody get a copy of the syllabus? Okay. Everybody see this right here? Honor code, right here. You're being in the class, now that you've seen the syllabus, you've seen this piece, you are now legally bound to the USF honor code. Okay? So ethics, okay, ethics, no cheating, okay? Every semester I get somebody comes in for my exams, they're talking to each other, they're copying off of each other, they got the notes in their pen thing here, I gotta find notes in here, don't do it, I mean, don't even take the exam, just go study, tell me you want to do it another time, just don't do it, you don't need to do it. Okay? And if you do come in and you still totally bomb, I'll make you go back and I'll make you redo it over again. Okay, anyway, because you got to do the content. Okay, I'm going to make you learn the stuff. Okay, some people think we can just, not read the book and not really do anything and see if they can get by and have me give them a gentle person's C. Okay, that doesn't work. Okay, it doesn't work because this is what I figured out. Test question, what is this? Normal distribution, right? And isn't this the way that most academicians grade their classes, is on a Bell distribution in the business school? Isn't that how they do it, right? So there's your mean right there. You get your B's here. Okay, you got your B pluses, and you got your A's, right? Your C's here, right? You got your D's here, and you got your F's there. Now, I'm sorry, these people right here, you're going nowhere, okay? So they don't even count. And if you're in that category, I will talk to you and ask you to come see me. So I try to get rid of those people. Okay? I don't get rid of them. I just work with them. Right? Right? I don't like bringing in Louie to get rid of you. Okay? No, I'm gonna work with you if you're having problems. And you might have issues. I usually find students that are having problems usually have family problems or work problems or learning problems. So I usually like to work with them to try to remediate that to help them out. Okay? And it's the same thing here with these people here. These people can become B people very quickly, okay, if they're persistent and they work together. So these are irrelevant too, okay. And then the C people, you're really B and A people. You're just, for some reason, busy, working, girlfriends, boyfriends, parents, whatever it is. There's some reason here. So I usually try to push you over into this category here. So the C's are basically irrelevant too. Okay. So if you want to get a C in this class, I'm not going to let you get away with it. Okay. Because I don't give C's. I don't give D's. I don't give F's. Okay. So that only leaves the B's like that. Okay. And it doesn't look like that. Actually, the distribution looks like this. Looks like that. Okay. So if you work with me and you follow along, you work hard, and you're persistent, you'll get a B plus to an A in the class. Okay. It's a lot of work, okay? Because I found out that the old distribution, the old way of doing it, was horrible, okay? Because I'm like giving D's and F's to students or C's to students and ruining their lives, the GPA. So I basically said, why don't I build a class based on effort, okay, and persistence and reinforcement, so that if you don't do so well for some reason or another, I'll work with you to get you over to remediate the issues so that you can try, and I end up pushing you into this zone, okay? But we got to be partners, okay? So you need to talk to me, and we need to be partners. It's the students that don't come see me that become alienated, and I become frustrated, because there's no reason to be back there without being a partner with me, right? You want to be my partner, right? So let's do it, all right? So I got a problem, but you don't need to cheat, okay? So that's that part. And then the course, basically, I try to replicate this course, and I'll try even harder this semester to give you the tools that you need to be able to compete. And we try to replicate the applied finance environment similar to an Ivy League example. Stanford, MIT, Georgetown, University of Hong Kong, Cambridge. So I'll try to replicate that, and we do that through practical application. Okay? So you're learning a lot of the stuff, and then I'm teaching you the application on how we actually use this stuff in the real world to solve problems. Okay? Because when you learn this stuff, and they're going to be asking you questions, what do you think? What should we do? That's huge, right? Because if you're right when you gave the advice, you're going to either make or save the company millions of dollars, which means you're going to get a promotion, a bonus, and a raise, and stock options. Okay? So this stuff that you're learning is so valuable, so important. It will change your trajectory in your life, okay, if you embrace it. And then down here, for those who want to do the Chartered Financial Analyst designation, the CFA designation, 3 years to do it. You do it, you're going to become an equity analyst, a bond analyst, a real estate analyst, an investment banker, a chief investment officer, you'll work in corporate finance or capital markets, and maybe go on to be the COO or CEO. Okay. So this certification is really important. And then what I did down here is I called up the Financial Times, okay? Financial Times published out of London, okay? The New York Times published out of New York City, okay? The Economist magazine is published out of London, okay? So what I did was I called them up and I said, I want access to the online content. So this is my email address with my password. So now you have access to the content for the Financial Times, for your memos, okay? I don't have the New York Times, okay, because I can only afford so much. I also have the Economist magazine with my email and my password to give you content for that too. And you might even be able to use it for some of your other classes too, okay? And then there's another website, and I'll go through these websites in a minute. There's another website right here called Seeking Alpha. If you go up there, you register, you can click on exchange traded funds, you can click on commodities, fixed income bonds, stocks, technology, energy, and they will feed to you on a daily basis, basically content and streaming articles that are of extremely high quality. Okay? Just be careful, because if you register, you'll be like me. I get like 12 of these things every single morning. Okay? And then my mailbox blows up. So what I do is I set up a folder and I just throw it into the folder, and if I want to go back and get it, I basically go back and go through the content, pull out the stuff that I want. Okay? So that's a good one too. Let's do some of the websites. So I can show you some of these websites. And you're going to be using these websites, where you should start to use these websites because if you're an economist or a financial person, if you're a CEO, CFO, controller, if you're a managing director with any type of company, you're managing the markets. Does it really matter that what happened today? Who were the two guys that got Manafort and who's the other guy? The attorney? Oh, that guy. Exactly, Cohen. Does it matter that those guys basically pleaded guilty? Does it matter that they pleaded guilty and they may be doing some prison time? Does it matter? Doesn't it? Yeah. Who are these guys? Who was their best friend? Who did they work for? Donald Trump. Donald Trump gets impeached. Is that going to have anything? Will that cause the stock market to go down? So will people be buying bonds? Buying safe bonds? Driving up bond prices, driving down interest rates? Yeah. Will they be selling off the dollar? Divesting from the United States because of political instability? Absolutely. So every piece of news that happens, that comes out that's significant, impacts the markets, impacts your portfolio. Could impact your future if we fall into a recession because of the political instability. So we have to watch this stuff every day. So this is the Wall Street Journal. Okay? Here's the Economist. You guys now can log in, get a ton of content, do it. Wall Street Journal, I don't subscribe to it, but the news, just going to the Wall Street Journal front page will give you a lot of information that's impacting the markets currently. Here's the CFA Institute. Oops. Kind of jumping around. So here's the CFA Institute. If anybody's interested in getting their designation, I highly recommend it. Also the Certified Financial Planner for Wealth Advisors, CFP. This is another good one. If you want to become an investment advisor, you need to pass exams by the Financial Industry Regulatory Authority, or FINRA. Okay? You need your Series 7, so you can sell stocks, bonds, and option contracts. You need a Series 66 to be able to advise your clients on where to put their money and to charge them a fee on the assets under management. And maybe even sell them some research, too. So you need a Series 66. And actually, there's what is called the SIE. SIE, for those of you who are finance majors or accounting or anybody interested in this industry, the SIE, which is I think the Standard Industry Element or something, it's now you, as a student, can take that exam and basically qualify to go take the Series 7. So now, before you had to be sponsored, now you don't have to be sponsored. As of October, you can go take the exam. As a student or anybody, if you pass the exam, they will hire you at Morgan Stanley, Merrill Lynch, B of A, Wells Fargo, Citigroup, maybe Goldman Sachs, if you do your master's degree at Stanford or Cal. So the regulatory authority, okay, is really important. Let's talk about data. Stockcharts.com. You're going to need to go use stockcharts.com for your memos. Okay. So these charts right here, these graphs, I'll go through this in a minute. We'll dissect this. But this is where they got the graphs. Okay. And these memos that I gave you are perfect. Okay. Show me the grammatical mistake. So I usually go over these things with the students like 15 times. If they want to get a really good grade, and use this as writing samples for potential internships and jobs. Okay, so these are the executive briefs that you're going to be doing with data, okay, and the graphs. So what's Apple's ticker? What's Apple's ticker? The ticker is the code for the stock. Okay, every publicly traded stock, every stock that's traded on an exchange, are you guys in the back, are you guys following along, or you checked out? Are you still following me? Okay, awesome. Every stock has a ticker symbol in which you can use to look up information, because the ticker is the code in which it is registered under as it's traded on the stock exchange. Either the NASDAQ exchange, National Association of Security Dealer Quotes, which is where most tech companies are traded, or the New York Stock Exchange, which is also called the Big Board, which is where everybody wants to list their securities, is on the Big Board. Okay, so stockcharts.com, what's the ticker symbol for Apple? Look it up. You don't know it. What's the ticker symbol for Apple? You're going to need to look up information. That's why we're in this class, so that you can use the computers to search for data, because your generation has access to data instantaneously, and we require that you obtain it. Okay. So what is the ticker symbol for Apple?
NASDAQ.
Yes, it is. What is the ticker symbol? You just yell. What? Got it. Okay. And then in this class, do not raise your hand, just yell out. Just yell. Okay? Because that's how we do it in business. Okay, so here we got, here is Apple's stock price charted going back to March. Okay, so it's not a very long period of time. Okay, and what you want to do is you want to take notes on this. Okay, and I will give you extra credit in this class if you take notes and hand in those notes with the quiz in the midterm, in the final. Okay, so notes. Okay, so here's Apple stock right here. These are called candlestick charts, okay, that show the ranges: high, low, median, mean, quintiles. These are basically box plots, which are in your exam. Okay? So as you can see, Apple stock went from what? 178. What is it? Are you guys pulling this up? Can you tell me what was it trading in March? What was stock per share priced at in March? What was it? You need to look at this up. You need to start practicing. You need to practice the calculator. You need to practice looking for data. If you just sit there and not do it, you're not engaged. Go for it.
The high was 179.
Okay, so that was like what, right here? 179?
Well, actually, March 1st, the high was 178.
Right here?
Yeah.
Okay, so you can see it right here. Right? And then it dipped down to what? What is it right here? In May it got as low as what?
168.
160, and then it recovered to what? 185? 189, and it looks like it was in a range, right? It dropped, came up, bottomed, came up, it's been trading in a range, and then look at it. It broke out. Up here, it's been an upward tear, up until recently at 215. I bought Apple in 1995 at $50. At 100 shares at $50. It's the biggest part of my portfolio now, because it's split like I don't know how many times. A third of my portfolio is now Apple. Okay, isn't that crazy? Okay. All right, so this is what you want to do, all right, for all of your stock research, okay? This is what you want to do. So here's the price, right? These are called moving averages. Up here, this is called an RSI, which is a relative strength index. And usually when the index is going up, the stock price is going up. When the index is going down, the stock price is going down. So it's a relative strength index, momentum. Okay? At the bottom here, you have volume. These are the number of shares traded per day on the on the NASDAQ exchange. Okay? And then down here, you have what is called the MACD, okay? A moving average. Okay? That also is a momentum. So you can see as that's going up, stock price goes up. As this goes down, stock price goes down. It looks like there's momentum in the MACD. And looks like the RSI is starting to come down, but the MACD is going up. So it looks like there might be some upward momentum to Apple stock prices. That's called technical analysis. Okay, I'll teach you fundamental and technical. So I like to look at the charts when I trade my securities. Okay? So what you want to do is go down here, right here. Okay? And then you want to go range. And I like to go back 3 years on all my stocks. This is what you're going to do. So you click on 3. Okay? Is everybody doing this? Because you need to do this. Or else you're going to be giving me charts that are all messed up. Then you have a simple moving average right here. You want to change that to 10. Okay? And the next simple moving average, you want to change to 30. Okay? And the next one, you want to add a simple moving average and keep it at 50. So did everybody see that? So I got a 3-year range. I got simple moving averages, 10-day, 30-day, and 50-day moving averages of the stock price. Okay? Now, Professor Souza, why are you teaching us this stuff? This is meaningless. It has nothing to do with finance. And I'm completely bored. This stuff just, I'm not interested in this. Because if you look at this correctly, and this is what I do in my other classes, is we look at these charts and we go, wow, look at this. Looks like Apple stock was trading in a range for, first year. Where are we now? In 2016, it was in a range. And then what happened right here is the 10-day moving average crossed the 50-day moving average. Then the 30-day moving average crossed the 50-day moving average, and that told us to buy the stock. And I bought it at 110, and I kept it and didn't sell it until it reached 150. So I bought it at 110, and I sold it at 150. Did I make any money on that theory? If the 10-day crosses the 50-day and then the 30-day crosses the 50-day, then I buy it. Up here, if the 10-day crosses the 50-day and then the 30-day crosses the 50-day on the downside, I sell it. Did I make any money? Yeah, I made 40 bucks, okay? Then here, it looks like the 10-day crossed the 50-day and then the 30-day, I bought it again. Might have sold it, bought it again, sold it, bought it again, sold it, bought it again. Did I make money? I was buying low and selling high. Isn't that economics? So by using the moving average crossover systems, 10-day, 30-day, 50-day, I can put together a trading system that's guaranteed to make money. This is a money machine. My students in my finance class, I basically give them $100,000 of theoretical money, and they go back and they back test it over a 3-year period, they make $100,000 a year. They made $300,000 over a 3-year period. Okay, guaranteed. Is that worth anything? Does it mean anything? Yeah, totally. Because this is how the traders do it. Okay? So then what you do is you copy this graph and you paste it into your memo. Okay? And then you find another stock and put it in there, or you put the stock indexes in there. So basically this is the #1 place that I go to create my charts. Okay? And I use the same tools. The other one is, do we need to go back over that? Did you guys get that? Did you have a question? How you hold notes? Pretty good? Okay. And then here you got bigcharts.com. You got a lot of news right here. And again, I can put in Apple stock. It's going to give me my chart. I can take that chart, I can copy it, paste it in my memo, and use that. I can go back 3 years. Do it like that. I can do a basic chart. I can do an advanced chart. I can start playing with it. Once you start playing with stock charts, applying technical analysis, you're a trader. Okay? You're a trader. And the problem is that the book, even though it says corporate finance, says nothing about technical trading methodology. There's a gap in it, in the book. And I try to fill the gap. The book has some gaps too. Okay? And I'm going to fill those gaps. Another place to get some data is Y charts. You can do a 7-day free trial, and then they're going to charge you money. The other one is that you can get some good data on is from the NASDAQ, National Association Security Dealers Quotes. The NASDAQ, this is great. This is where a lot of tech firms are traded on the NASDAQ exchange. This website is freaking awesome because I can actually do some quotes. I can build a portfolio. I can get data on a daily basis going back 5 years if I want to. I can export the data in Excel and use it for modeling purposes. We do all kinds of cool stuff with it. So NASDAQ's this guy's a billionaire. I interviewed with him in like 1980. I interviewed with this guy. He looked at my grade point and he said, "You got D's all over the place. We can't hire you." I said, "Well, how about if I go back and get a master's degree and a doctorate degree?" He didn't care. By the time I lost the interview. So don't get D's. And then here's the New York Stock Exchange right here. www.nysc.com, New York Stock Exchange. This is where all the major companies, most companies will start on the NASDAQ exchange, and then they will migrate to the New York Stock Exchange once they get to be a certain size. And then once they get to be a certain size, they migrate to the New York Stock Exchange, and then they become part of the Standard & Poor's 500 index, the top 500 companies traded on the New York Stock Exchange. The S&P 500, Standard & Poor's top 500 stocks index is the benchmark for all portfolio managers that are managing equity securities. Okay. So, New York Stock Exchange. We're going to be talking about in the memo, in this little box right here. Okay. Box right here, index right here, then we've got these derivative trades. Okay, derivatives are basically I can trade a security based on the movement of the stock exchange without buying the securities at all. It's basically I'm betting on the direction of the index. Okay? And if I know what direction the index is going to go, I can apply these trades and make money, okay? And make money. I don't even need to buy the shares. I know the direction, oil prices, gold prices, bond prices, stock prices, currencies, and I know the direction that they're going to go. I can use these derivatives to make money. That's called a hedge fund. Okay? A hedge fund. Hedge funds just basically borrow a bunch of money, hire a bunch of really smart people like yourself, and then they basically do a bunch of research. They forecast where the direction of these prices are going to go. They apply these derivative trades and make a shitload of money. Okay. Or save people a lot of money from losing money. Because these things are used to protect your portfolios. Okay. So I'm kind of giving you a crash course here. The other place, the place where they trade these derivative contracts is called the Chicago Mercantile Exchange, or the CME. This is the largest derivative trading platform in the world. Billions, trillions of dollars of contracts are traded on these exchanges, basically either hedging risk or taking bets on what direction the prices of these assets are going to go, either up or down. My specialization has been over the years in building indexes, like the S&P 500 for real estate. Okay. And then working with the Chicago Mercantile Exchange and Standard & Poor's to develop the market. So I'm a product developer. Okay. And then the other big exchange is the Chicago Board Options Exchange. And then there's the New York Options Exchange, or the NYMEX, and then there's the global platforms out of Asia and Europe that are really big too. Okay. How are we doing on time? Is everybody holding up, or do you want to take a break, or how are we doing? You want to do like 10 minutes or something, or a little break, a little cookie, bathroom, water, come back, keep going? Okay. If you want to talk to me about anything, resumes, grades, internships, jobs, research projects. Like, is this working out for you? Oh, yeah. I'll try to angle it.
Oh, no.
Is it okay?
I just
Yeah, just.
because I haven't last semester.
Well, you know, I
Yeah, but then
it's just the adrenaline and everything. So let me know how I can help. I'll bring the cookies.
No, that's fine. I just wondering.
Yeah, I can let you Yeah, 10 day.
你坐在我这儿，你坐下，坐下，坐下，坐下，你坐在我这儿，你坐在我这儿。哇，再前往前一点，
10 day will go like that.
再往前一点。
Then the 30 day will go.
哇，我是唯一一个上镜的，走吧。
So once you got
难受。
10 day and the 30 day, cross over the 50 day, that's your buy signal. Buy signal. Buy alert, that's the buy signal. Then, make extension. Then it goes like this. Okay. So then, what will happen is the 10 day will go like that. And then that'll drag down to 30 day. This is going to be your, this is your sell alert. And then this is your sell signal. Right there. Yeah. So that's basically it. So the 10 day will move first and then the 30 day. So once the 10 day crosses the 50, that's the alert. When the 30 day crosses the 50, that's the signal. And if you just stick to that, you'll make money. You're not going to make a lot of money, but you'll make enough money. Okay? At least you won't lose money. And then if the, let's say here, let's say this is the 10. The 10 goes like this. Right? And then it drags up to 30. This. This is a hole. Because the 10 and the 30 are above the 50, so you want it. And if it drops down below it, and there's no signal, you just stay there. And I'll teach you how to make, not only how to buy and sell, but how to use derivative contracts to make more money.
我也很好奇，他为什么跟我这么干这件事情没好。
他也不是上班。10 days.
所以他暑假上不了。
Green is the 30.
我今天坐在那边，手机放在我俩腿那边，然后那里跑道，我站起来，直接掉了。
So people use different intervals. This is the one that you don't get a lot of trades out of it, but you get winning trades. And if you're doing this in a retirement account, there's no tax. It's a smart way to build wealth in a retirement account.
是这个这个课怎么搞？2020公司号。2050。没有。
哎，好奇怪，我们之前打开。当然了，谁也等不了你吃好饭10点半。
他明明跟我一个时间，他只不过早下课。他应该10点10点。他跟我讲，说咱估计9点。
You're gonna watch the video?
他可能9点钟就下课。
对啊，我也觉得。
Are you gonna watch the video? No, are you gonna get notes from your partner? No, you can have it.
这场不应该9点吧？这场不应该9点吧？否则你让我怎么回家嘛？所以我现在是3.5。我也是，之前就忘了。到底是啥课？我礼拜一我去3.2。这件事为什么要讲3太多，这个要30。
You do have a cookie? Some water? How's everybody doing so far? Okay. It's entertaining? Fun? Usually I quit when I lose my. So let's keep going through the. So you're going to read the syllabus. Right? Promise. Being a Girl Scout. I'm going to read the syllabus. Okay. Please read the syllabus. I spent a lot of time working on it, so read it, and I'll ask you some questions about it. And then here's the really the schedule. All right. So the first, we're going to try. What we should do is probably next week. Why don't you go through the homework problems? Maybe pick 1 or 2 of them, solve it, bring it, check it, stick it on the board, and pound out the homework. How's that? Unless you want to do it yourself. You work together? Yeah. Okay. That's what I would do. So pick some homework problems, and then come in your teams, and then come, and then we'll work through them, okay? And we'll pound out the homework. Okay? The homework needs to have a cover page, okay? University, course, section. You want to have homework, number 1 on it, to me, from you, in the date at the bottom, cover page, professional cover page. Okay. So you can write out the answers to them, staple them together, beautifully handwritten with the cover page. You're going to submit it to me. Okay. And if you want to submit the notes, you can submit the notes with the cover page separately stapled together, or extra credit. Okay.
One pop or two? Just one, right?
What?
Homework.
You can do 1 or 2, it doesn't matter. Yeah, you can put up the homeworks that you want to do on the board, and that way we know that people aren't doing the same one. So you can pick one. We do that in in 40 minutes or so. You just race to the board, pick some problems, and then we'll come back and we'll work through it next week.
Okay.
How's that sound?
So in homework 1, for the chapter 1, you can put whatever, choose one of them or one chapter?
No, just pick one problem. Okay, or 2, right? They're not that hard. Okay, so this is basically the schedule we're going to be on. Okay. Now here, this is the midterm. Probably next week I'm going to give you the midterm. I mean, sorry, the quiz. Sorry. Yeah, one night and you go straight to the midterm. Great class, Professor Souza. Okay, sorry. So I'll give you the midterm, okay? And then we'll go over the midterm. So you study it, we'll record it, and then you'll come in and you'll take it. Okay, no surprises. Okay, for the midterm, no surprises, because I need you to learn the stuff. I need you to learn the stuff, right? Not cram for it, come take it, and go up in flames, right? I want you to study for it. We work together. You ask me questions. You study it, and then you come back and you frickin' ace it, okay? Because you learned it, all right? No cramming, okay? No cram. All right. So here's who's marketing major? Marketing major. You got it. Management. Keep your hands up. Marketing majors. Entrepreneur majors. Management majors. Entrepreneurship. Finance. Got it. Okay. Accounting. Okay, awesome. Okay. So here's the lecture right here on financial product innovation. I'm a financial engineer. I build product. Financial product. Indexes, derivatives, securities, structured product. It's basically, finance is just a technology. All it is a technology. It's a tool. Okay? And either you can pull tools, different securities that are already in the markets, and put them together to solve the problem. That's called synthetic. Okay? Or what I can do is I can see a problem, and design a product to solve the problem in the capital markets. That's where I wanted to be. I wanted to build the product, and then launch the product, trade the product, and advise people on the product. Okay. So that's what you can do. So this lecture right here, and I'll go through it in class, this is basically what do you need from an institutional standpoint to be able to identify problems in the marketplace, then build the product, and then launch the product and have the product adopted by the marketplace, and then make it online. As the designer, the developer, the trader, the engineer, the marketing professional, the entrepreneur, the person who did it. Okay. So this basically lays out, and this is a capstone. Okay? This is a capstone. So it's a great review for you now in your junior year, because you're going to have to take a capstone course at the end of your senior year. So That lecture is a capstone using finance. The product is basically the tool within the environment to be able to launch the product and get it adopted to solve the problem, okay, and make a market. Then these lectures right here are, you all took macroeconomics, correct? Yes. Do you remember yield curves? The yield curve. Okay. Yield curves. Yield curve. Yield curve. I am obsessed. I'm obsessed with yield curves. Obsessed with it. Because I've been telling people over the last 5 years that if the yield curve flattens and inverts, we're going to be in a recession within 2 years. Less than 24 months. So the yield curve, these are like my yield curve lectures. Okay? They don't really address it in your macroeconomics, and they really don't address it in the book. But it's probably one of the most important predictors for market peaks and recessions out there. It's been like 90% accurate since 1955. Okay? So the yield curve, again, I will go through this in more detail, is upward sloping. Okay? This is maturity on the bonds. Now the government, because it runs deficits, and we only have 23 trillion in debt outstanding, that's all. And we're probably going to run around $1 trillion a year for the next 5 years or 7 years. The government likes to issue bonds with specific maturities, okay? So maturity is the time the bond is going to last, its life, basically. And it could be 3 months, 6 months, 9 months, 1 year, 3 years, 5 years, 7 years, 10 years, 20 years, and 30 years. And in European countries and other countries, they have bonds that go out into perpetuity forever. So it's by maturity, okay? And for each maturity, there is a interest rate, okay? It's the cost, because when the government issues the bond, they're going to have to pay the bondholder some interest rate, okay? Because if I'm going to lend the government money, I want to get paid for it. I'm not lending it to them for free. So I want to get an interest rate. It's a cost of capital, okay? So there's different interest rates for different maturities of these bonds. They're called interest rates, but they're also called yield to maturities. You'll learn about this when we get to the bond section, but I need to fast forward a lot of this stuff. So you have these interest rates for different maturities of these government bonds. They could be corporate bonds too, but we don't care about them, because basically government bonds are considered risk-free, because the government can always print money to pay the interest on the bonds and the principal on the bonds when they come due. So they're risk-free. The government can always print money to satisfy the interest payments and the principal payments at the end. Okay, so they're called risk-free. Risk-free. Got it. Or I use RF as my terminology. Okay, and you're going to need to get used to my acronyms, because the books use different theirs, and then I like to use mine. Okay. So as you can see, this curve is upward sloping. It's upward sloping. This is also called a normal curve. Got it. Okay. And the curve is broken up into 4 sections. There is the short end of the curve here. There's the medium or mid of the curve. And then there's the long end of the curve. Right short, medium, long. Got it. Okay. And these curves, these yield curves, can shift up and they can shift down. Okay. And you're going to need to memorize this equation, and it's in the book. It's called the Fisher equation. And the Fisher equation, after Irving Fisher, who was brilliant, he invented a bunch of financial theory. The guy was just brilliant. That basically states that these nominal interest rates, are equal to nominal equals some real rate, some real interest rate, plus inflation expectations. Because if I'm a bond holder, if the government wants to issue bonds to finance the deficit, well, why would I buy a bond from the government that's going to yield 3% per year over the next 3 years when inflation is running at 6%? It means that my real rate of return is negative. That means that my real return is negative because inflation is aiding and deteriorating the purchasing power of the interest and the principal of my bond. And bondholders say, no, I want to be compensated for the inflation. I want to be compensated for the inflation. So I want some real rate, which is usually really low, plus some inflation expectation compensation. This is inflation expectation. That's like a little star. So it's E star. Okay. And the book has it. These are my nomenclatures. These are my symbols. Okay. So basically the theory states that if I'm the bond holder, I'm the bond market, I think that GDP is running at 4% and CPI is running at 3%, and the cost of wages are running at 4%. It looks like inflation's starting to build. And I think there's going to be higher inflation in the future. Therefore, my inflation expectations are going to go up, and interest rates are going to go up, and bond prices are going to go down. Because interest rates and bond prices move in opposite directions. You need to write that down, you need to memorize it. It's the law of economics. It's the law of financial economics. If interest rates go up, bond prices go down. If bond prices go down, interest rates go up. Up, down, up, down, down, up. It's a game, okay? Your business degree, everything that you learn, you're just learning a game. You're learning the rules of the game, and the language of the rules of the game and how the game's played. If you understand the rules of the game and you understand the terminology and the linguistics and the culture around the game, you will be successful. If you don't, you will not, okay? So this is the name, this is the terminology of the game. All right, so if inflation expectations go up, then interest rates or the yield curve shifts up. If inflation expectations, because we're going into a recession, or disinflation or deflationary spiral of some part, then if inflation expectations go down, then interest rates are going to go down and bond prices are going to go up. So the yield curve shifts down. In the theory, and I'll get into this a little bit more, but I'm trying to make a point here. Let's say I get paid some kind of interest coupon. You're going to learn about this. I get paid, right, either a dividend from the stock or I'm going to get a coupon interest from the bond. And I'm going to divide this by some interest rate, some cost of capital, a discount rate. They're all interchangeable terminologies. And this is going to give me the value of the bond. Well, if inflation expectations, you need to watch this. Okay, this is key here. If inflation expectations go up, interest rates go up, interest rates go up, oops, bond prices go down. Okay, stock prices go down. Okay, if inflation expectations go down, interest rates go down, interest rates go down, bond prices go up, stock prices go up. Okay. So the shifting in the yield curve can be done by the changes in inflation expectations from the marketplace. Okay. But here's the caveat to the whole thing, and this is what I'm trying to get to here, which is extremely important. Because in this class, we're going to be focusing on the value of stocks, bonds, and companies. Okay, total application. Here's the key to the whole thing. Is out here on the long end of the curve, it's the market that determines the shifting of the yield curve up and down, interest rates up and down, and bond prices up and down. Okay? But on the short end of the curve, this is the most important thing right here, is the Federal Reserve controls the yield curve, the short end of the yield curve, through open market operations. They buy and sell bonds through open market operations through the Bank of New York, the Federal Reserve Bank of New York. Now, if the Federal Reserve sees that inflation is kicking up 3%, wages are kicking up 3%, healthcare 10%, cost of food 10%, education 10%, stock prices overvalued, bond prices overvalued, real estate prices overvalued, they're going to start selling bonds, driving down bond prices and driving up interest rates on the short end of the curve. This is what's been happening recently. And what's happened is the yield curve has flattened. And it's already affecting the housing market, particularly at the lower end. Now here's what happens every single time, is the Fed oversells the bonds, driving bond prices too far down and interest rates too far up to cool the economy, to prick the asset price bubbles, to slow the inflation in the economy, and they invert it. This is flat, this is inverted. The corporate bond curve is already inverted. Other emerging market bonds, sovereign bonds, particularly in Asia, have already inverted. Okay. The inversion of the curve, I'll show it to you. Once the curve inverts, the stock market peaks in 12 months or less. S&P 500 peak within 12 months. And within less than 24 months, we are in a recession. So the curve is getting close to inverting. It's close, it's the narrowest it's been. The spread between the short rates and the long rates are about 25 basis points. They're really narrow. They've never been like that until since basically 2009. Okay, so almost 10 years ago. So it's the flattest it's ever been. We're really close to inverting. And the Fed's going to sell $80 billion worth of bonds per month by the end of next year. And we're going to need to finance $1.25 trillion of sovereign debt by the end of next year too, because of the tax cuts. So we're almost guaranteed an inversion in the curve probably by the end of next year. So when's the stock market going to peak? If the curve inverts at the end of 2019, when's the stock market going to peak? 2020. And then when are we going to be in a recession? 2021, 23 probably. Okay. Is that important to know that? Yeah, because I get that question every freaking day. Larry, when's the recession? What should I be doing? Should I be buying? Should I be selling? Should I hold my home? Should I sell my home? Should I hold my property? Should I refinance it now? Okay. So that's what those lectures are. I put the most important lectures up here first. Okay. And then here's the homework. Again, pick some homeworks. Let's work on some problems next week. Then the following week, we got the statistical pretest. Right, so it looks like I'm giving you a couple weeks, maybe. I thought I was going to give you, that was next week. Oh man, I'm being too nice in my whole thing. And then we need to do the memos. Okay. So then you're going to need to bring me a memo. A memo. Okay. And when you do these memos, and I'll go over the memos next week with you. And there's a lecture, there's a memo lecture on the course website that I'll show you. But these are the memos. You're going to give me just one. You're going to give me a stop memo. What I would do is I would copy this memo exactly and then update the data. And then update the data the best you can. Because it's all in the format. Okay? Is anybody going to read your memo if there's spelling errors in it? No. I was working with a career center person today. She goes, I really want to help this person get a job. He's a really good person. I need to print out his resume. She printed out his resume, he had a typo. First sentence. Typo in the, do you think somebody's going to read it? If there's a typo in it? Okay. If there's misinformation or anything. So I will train you on this. Just make an attempt, try to do it, and just, see what you can do. Don't worry about it. Just give it a shot. Okay, just replicate it exactly and do the research, and then I'll train you in it. Yes.
Like what you said, you want it like copied. Like, did you care if it was verbatim, just different?
Yeah, I don't care if it's verbatim.
Okay.
Do it verbatim, and then step back and change the forecast. Change the data. Use different graphs. Okay, and then I'll work with you, and I'll show you where the video is. That will walk you through it, and I'll train you how to do it next week. Okay. So we will go over the memos over and over again. Tracy will help you out on the memos. I got Amy Ding. I don't know if you guys know Amy. She's worked with me for 2 years. She's fluent, in Chinese, so she can help, my foreign students who are having English writing issues. She will work with you. I have like 2-3 other people that will work with you. I'm basically putting together a team of students as TAs to totally work with you. Okay, to work with you on anything. Okay, on anything. And these are my best students. All right. Figured I'd put together a team. Right. And then if you have problems, I'll work with you. They'll work with you. You can call them anytime, set up a time, meet with them, whatever it takes. Okay. So I'll talk a little bit about the memo a little bit later. And then, the homework comes due. Are we going to work on the problems together? Are we going to work on the homework problems together? Yes. Or do you want to do them yourself?
Yeah.
Okay, perfect. So we can divvy them up. We'll all come in, pound them out, we'll go through them. I'll bring the solutions. We'll work on them in teams. Okay. And they're not. I didn't pick all the hard ones. They're not that hard. Okay. And then on Tuesday, September 18th, we're going to have the in-class quiz. Okay. And the quiz is going to be, and I'll give you the quiz next week. And then we'll do the lectures, we'll work on the problems, we'll get the book out of the way, we'll work on the high-level stuff. Okay. And then you'll come in, you'll take the exam. I'll bring, I don't know, I usually bring like banana cream pie or coconut cream pie, or I guess it'll be in October, that's like pumpkin pie or something like that. So I'll bring the pie. And then what you'll do is you'll put together a deliverable package, okay, a submission, an actual package, not come in, take the exam, circle some multiple choice, get a Scantron, give it back. When you go work for somebody, are they going to give you a Scantron exam? No. Are they going to ask you to write stuff? Yeah. Are they going to ask you to put together, do analysis and do a PowerPoint presentation? That stuff doesn't help you. So then you're going to put together the package. I'll talk about that later. And then after the exam, I'll grade it with my TAs. We'll come back, and then the night after the exam, we will watch The Inside Job. Anybody see The Inside Job documentary on the financial crisis? Award-winning, I think, won an Oscar. So we'll watch that. And then you individually with my TAs, we will go into a room over there and we will review your work and then give you recommendations on any remediation that you will need to do. And if not, you're on your way. You're gone. Okay? Because again, I gotta get everybody into that BA category. Nobody gets left behind. Okay? And if you wanna be left behind, we're not gonna leave you behind. We're gonna come get you and drag you into the B and the A category. And then the homework gets a little bit smaller, okay? Second time around, I cut everything in half, so I try to front load. The majority of the work in the class is front loaded to the first third, and the second kind of, you know, third to third, like the first 45% of the class, the majority of it gets thrown in, you know, into the first part, and then I taper it down, and I give you some resources to go work on your other classes. So I get you while you're fresh, okay? And then I give it back. Then I give it back to you, okay? I give you back the time, okay? And then when you do the memos, every time you hand in a memo, you gotta hand in the prior memo. So I'm constantly reviewing your memos over and over again. So if you were a managing director, and I asked you to write a technical trading brief for me, and you handed it to me, would I assume that it's perfectly written? Usually not. Yeah, because there's, because I want to check it. Should you always have somebody read your work? Yes. Because do you think you could skip over stuff that you've been staring at for like 8 hours before? Yeah, you're gonna miss stuff. The only way that you're gonna catch your mistakes is if you have somebody look at it and if you read it out loud. Okay, you're gonna pick up all of your mistakes. Okay, I'm giving you all the tools of the trade, all the mistakes that I made. If you can learn from me, you will not make the mistakes that I made, and you will be extremely appealing to employers, okay, or investors. Okay, so that's that. So always remember, when you hand in a memo, hand in the prior memos and staple them together for me. Then we got our fall break, homework 2, same methodology. We take the second part of the midterm. The midterm is application. So the first quiz is theory, applied theory. The midterm, application. So we're going to do tech startup valuation. We're going to do a tech stock valuation. We're going to do an established tech valuation, established tech stock valuation. We're going to do a real estate investment trust security valuation, and we're going to do a real estate valuation. We're going to do Mission Bay. Anybody know Mission Bay? Mission Bay, UCSF, multi-billion-dollar mixed-use project with help with basically biopharma and Genentech, UCSF. You guys got to. This is the cutting-edge, freaking biopharma, medical facilities, cancer research, UCSF, freaking medical, scientific research. It's the #1 in the freaking world, and it's right here in Mission Bay. So we're going to value that, because I did value that like 15 years ago. So I'll walk you through the real estate valuation process. So you have like 6 problems, and I'll walk you through all this. Okay. Then, as you can see, the homework shrinks. In the end here, this is really easy. Okay. You work together, you're done. Homework gone. Then what we do is, and I don't have the example of it, is then what we do is we spend the last part of the class, I train you on how to do securities valuation, and we're going to use Goldman Sachs as the case study. We're going to go up to Mergent and pull down some financial information. We're going to collect financial ratios. We're going to calculate the peer group ratio and the industry ratio. We're going to conduct financial ratio analysis to get the overall financial condition and position of the firm. And then we're going to utilize the 4 valuation methodologies that I'm going to train you on to come up with the stock value, and you're going to make a recommendation. Should we buy it? Should we hold it? Should we sell it? And what are the derivative trades that you would recommend to an institutional client or a high net worth client, or for yourself, to basically make sure that you're either hedging off the risk or you're taking advantage of price anomalies in the marketplace based off your research. And you're going to take the memos, you're going to take the deliverable packages, and you're going to take the pitch books, and you're going to show them to potential employers to show them the kind of work that And that's my goal. And then the very last part of the class, you guys will do a presentation. You'll be doing one practice presentation, you'll do a formal presentation, and then I will record the final presentation to then be used and distributed to your classes that come after you. The best ones will be used so that they can model you and see how really good presentations are done by the leaders. Okay? And then the last night of class, the final, it's totally chill. What is it, 8 to 10, right? Goes from 8 o'clock to 10 o'clock. It's only 2 hours. So basically you come, we chill for a half hour. I'll probably have the Rolling Stones playing and cake, you know, and pie all over the place. And then you'll be putting together your packages. I will lecture from 40 to 60 minutes. It's an exit lecture where I will give you personal financial training and academic training and other types of training that you will need to go on to succeed. And then we'll get out of here at probably like 9:30. Deliver my stuff, and that'll be it. And then if you want to come work with me in any of my businesses or any of my research, or just be friends or something, then I would totally appreciate that. Okay. Any questions on that? Okay. One more thing, and then I'll let you go because my voice is starting. Any questions? Yes.
I don't know if you already said this, but when you're going through the dates, but on Tuesday, September 4th, it says the statistical free test is due, but on this it says Tuesday. So I don't know which day you want. Yeah. So what's the due date?
Can you guys do it by next week? Can you pound it out? Even if you don't, do the best you can, okay? Do the best you can, bring it, I'll check it, okay? Then what we'll do is we'll go over it, you'll be able to work in it, okay? And then if you want, I'll check it again, okay? You'll have time to go work on it, and then you submit it with the quiz, the first deliverable. So you'll have time to work on it.
So it's due Tuesday.
I would do it Tuesday, and then we'll go over it on Tuesday. Okay, I'll check it, see if you did it. We'll go over it on Tuesday, and then you'll hand it in for the first deliverable. So you'll have plenty of time to do it. I'm not really looking at how great you did, because the great students are going to do a great job, so I'm not worried about that. Other people may procrastinate, like I do. They'll make an attempt at it, but they need more time, okay? Go spend more time. And then, but make sure that when you hand it in, for the deliverable, it's got to be perfect, okay? It's got to be really good. That's what I'll be reading. So I would say go ahead and do it so you can do it next week. Because I need you to start thinking in statistical terms. Okay. All right, so, this won't take too much time. I got a couple more things I need to do. I need to show you the resources. Okay, so we did that. My office hours, again, I will be here or over there. Here are the student examples. So what I did is I was at work today. I got a bunch of sets of 5. I scanned them. I put them in here. Professor Souza, I don't know how to do the memos. Really? Because there's 13 sets of them right there on the website that you can use as a guide. And I'm going to walk you through them, and there's a video. Okay? And if you still have problems, I got 3, 5 TAs and myself that will help you. And we'll do it over and over again until they're perfect. How much more help do you need? Okay, is that going to do it? I hope so. Okay, so let's do it. Okay, so that's that. Then, oh, here, movie review videos. Right there in front of our face. And then there's the macroeconomic analysis. This is from last class. Here are the financial calculator manuals. Professor Souza, I don't know how to do net present value. Right here. Okay, there's the manuals for all 3 of them. Right there. And if anybody wants to do some trading games, you want to build some portfolios and start trading, you can use these sites. What I'm going to do is by next week, I have a template. It's really super simple, and you guys should probably do this down, write this down. What I need you to do in your teams of 3 is I need you to pick 25 stocks. Come up with a strategy. I want to do all tech, okay? 25 tech stocks. Okay? I want to do all defense. I want to do tech and defense. I want to do medical tech, tech, and defense. I want to do medical tech, tech and defense, and energy. So come up with a portfolio strategy, pick 25 stocks, okay? And come next week with your 25 stocks, okay? And then I will walk you through the template. And it's really easy, because from the template, what you'll do is you'll put in revenues, you'll put in the stock price today, a year ago, 3 years ago, 5 years ago, and 10 years ago if you have it. And what it'll do is it will back test your portfolio to see how you would have done if you had built that portfolio and how would it have performed over the last year, 3 years, 5 years, and 10 years. Okay. So now you're starting to build your own portfolios and learn how to manage your own money. Okay. Did you have a question?
No, sorry, I'm not stop, sorry.
Awesome, perfect. That's awesome. That's what I want you to do. Okay, so come with 25, and then I'll walk you through the template, and then it's really easy to put the in there. And then once you guys are finished with it, you can show me it. I'll check it, and we'll see how you did. Okay. And I'll clean it up. It's really straightforward. Okay. And that'll be like extra bonus credit too. Okay, here we go. Course description, syllabus, goals, objectives, syllabus, schedule, syllabus, grading policy, syllabus. Okay. Again, I'm looking for performance, on your stuff. Okay. Prerequisites, we talked about that. Here are the review courses. I don't remember statistics. I don't remember finance. I don't remember accounting. I don't remember economics. So what I did was I went back, and they're all here. So you can spend 20 minutes going through financial ratios or accounting or discounted cash flow or whatever it is that you're having, monetary policy, you got it right there. Okay. So I tried to make this thing as resource rich as possible. Oh, here, look at this. Statistical pretest, statistical resource material. Okay, here we go. Attached is the draft of the statistical pretest. Oh shit, I need to update that. Yeah, that's the last, but I already did the update. Here are all the resources, right here. You can use Google, you can use whatever. There's no reason why you can't get it. The problem you're gonna have a hard time is the regression modeling piece. Give it an attempt, but if you don't get it, don't worry about it, keep moving, and then I'll go back and I'll fill that in and I'll teach you how to build models, because you're gonna be asked to build models. And then here are some review lectures too. Everything's under assignments. Usually you guys are used to it being in modules. I did everything in assignments, so there's a lot of stuff here, so please be patient with me, don't throw me under the bus. So here's some review courses, here's the statistical pretest, we know what the book is. Here's all the PowerPoint presentations. I have to look at those too. So when we go through the PowerPoint presentations, and actually you guys probably will be the ones that co-present with me. If there's a chapter that you want to present because you're really interested in the financial accounting or the new venture finance or the monetary policy, tell me and we'll do it together. We'll present together. But the PowerPoints are right there. Here's my information. Again, it's on the syllabus. Here's professional licenses and certifications if you're interested in CPA, CFA, Series 766, real estate license, insurance license. It's all right there. What else? Let's see if I can get out of here. My contact licenses, writing resources for those people who have. Use the Writing Center. Caveat. Writing Center are English majors, not business majors. English writers, not business writers. Okay? English writers, fluffy, fluffy, fluff, fluff. Business writers, get to the frickin' point, okay? Just get to the point, all right? So it's a totally different stuff. Here are some examples, some articles. What is this? these are some historical stuff. Here's the log from last year, so if you want to go back. Here's the movie review worksheet. Here's all of my lectures if you're interested. Instructor lectures, and then here's the stuff we're going to do at the end of the semester. Last thing, and then I'll let you go. And then I'll leave it hang out for a moment. Is the Wiley Plus. Okay. Now this is totally freaking cool. So you click on this. Okay, so here you can, right here, so 130 bucks. This gives you just the Wiley Plus. I just want the ebook, right? Right? If I want to save money, I just want the ebook, right? And the Wiley Plus. I like the loose leaf, I get that. If I want the ebook and the Wiley Plus, you can do that here. So, you can pick whatever you want, or you can buy through the website. Okay, yes.
When you said that we can share, do you think we've shared with more than like 2 people?
I really don't care if you do that.
But will like the website allow us to?
You'll just have to work on some, like when I do some of the, maybe some electronic assignments, you'll have to work on them together. I don't have any problems working on them together. I don't want to have to, where you guys, Wiley Plus is making $1 million off you, because I'm forcing you to buy it, to buy it. I would buy it and share it. Okay, so you don't have to, have the burden. So the cheapest would be to either do the ebook and then share it, right? So it becomes cheaper. Right? Is that okay? Yeah. I really don't care, how you do it. Let's see if I can get this thing. I'll take some questions if you have any questions. Are you guys getting my emails? Are you getting my emails? Yeah, if you email me, do not email me through the email system, because I can get into it. Send it to my lsusa@johnsonsusa. Send it to my personal email. And again, if you text me, I will call you right back. Okay, so here it's the read, study, and practice. There we go. So here's the Wiley Plus. Wiley Plus is badass. So here, also, here's some resources here for the statistical pretest. So here, so that's the first. And then you can pick the chapters. Here are all the different chapters. You can pick the sections from the chapters. Study objectives. Here's what I like. If you don't like my narrated PowerPoints or don't like my lectures when it comes to the book, you can do the narrated PowerPoints, which will basically walk you through the narrated, and they're way better than me. They're totally professional. Then over here you got solutions videos that will walk you through problems for the different chapters. You can have a hard time on discounted cash flow or future values or present values or internal rates of return or net, whatever. You can go in here and walk you through the solutions and look, there's some problems here and probably some of those problems are probably out there. So you can do that too. Then you got some Excel videos here. I'll walk through some of the Excel stuff, but here you want to be able to do bonds, and here's, I'm gonna walk you through the problems, and the problems again are on in the homework. They will walk you through the Excel. And if you wanna do the Excel and hand the Excel in lieu of the handwritten, I'll take it. I'll take the Excel, okay? If you wanna practice your Excel stuff. Here's some Excel templates. Here's some learning by doing interactive, some weekly news updates, career coaching. So really the value is right in these three right here. So if you get stuck, get frustrated or anything, this should totally help you out. And again, if you totally get stuck, move on, and then I will help you. I'll have the solutions manual. You can either call me or come see me, and I'll walk you through it, but just keep moving. Don't get stuck. Don't stick. Okay. And then what I will provide too, for those finance and accounting or others, I will provide a problem set, an extra credit or extra problem set if you want to practice doing more of the problems. You can do that too. Okay. I think that's all I can do. I'm totally exhausted. I'm sure you're exhausted too. Okay, so is this going to work out, this environment, the computers and stuff, Teams? Is this all doable? Thank you very much. It was really nice meeting you, and I look forward to teaching you for the rest of the semester. Let me know what I can do for you. If anybody wants to take some cookies with them. Yeah, because I want to go over the rest. And then I want you to do no, not the homework. No. It's assigned, but it's.
Oh no, but like we're like practicing.
Yeah.
Just doing it.
Yeah, bring some. Yeah, bring some. And we'll work on it.
Okay, and the 25.
And 25 stocks. Just 25 tech stocks get some homework. So bring some homework. You can do any stocks you want. Yeah, I would make it easier. Unless you can do this.
Yeah, because we're in class, you're just gonna have other people doing it.
Yeah.
Does that make sense? Yeah. You have power page with just homework or no?
I can show you what.
Okay.
But you don't need it. You don't need it for next time. Just when some people pull out from the deliverable package, one set, and give it to them. To show them the calculation. We're doing problems next week. Just problems. Yeah, then we'll all do them. Yeah. That's what, and then you can do, some of them are actually, the solutions are already up there. So they can walk you through, and then you can also do them with Excel. You can hand in the Excel spreadsheet. I prefer if you text me first. And then, could you maybe help me with this, because it was not up there. So next time, if you can move them around, and so I don't forget. Thank you. I appreciate it.